Hello everyone, and welcome to Virginia International University's MBA 605 auditing program. Today we're going to be talking about the audit of the payroll and personnel cycle. Some of the topics that we'll cover today is that we will identify the accounts and transactions in the payroll and personnel cycle. So what GL accounts are used and what are some examples of some of the transactions that are executed as a result of this business cycle. We'll describe the business functions and the related documents and records that are used in the payroll and personnel cycle. And we'll also try to understand some of the internal control designs that are incorporated into that business function and how we perform tests and controls of those designs, as well as substantive tests of the transactions that we'll talk about earlier. We'll also talk about the important step of analytical procedures and how we design and perform those. And then finally, we'll talk about the test of details of balances for accounts in the payroll and personnel cycle. So what we're trying to look at here is the payroll and personnel cycle as a business function or business cycle among multiple business functions and business cycles that we audit as part of the year-end financial statement audits. And so the overall objective in the audit of this business function is to evaluate whether the account balances affected by the cycle are fairly stated in accordance with applicable accounting standards. And you'll notice the trend that we'll do that for each of these business cycles that we review this semester. And by breaking these business cycles down into something manageable, we're able to conclude on different cycles or different business functions, and in the end, based on our conclusion on each of those cycles, we can reach some conclusion or determination about how those functions and the results of those functions are reflected in the financial statements. And so here we see the general ledger accounts that are used in the payroll and personnel cycle, and obviously we use cash because we pay staff. We have accrued wages, salaries, bonuses, and commissions because sometimes our payroll cycles don't end on the exact same month-end or year-end statement date. We have without income taxes and other deductions, which is a liability account, as are accrued wages, salaries, bonuses, and commissions. And we have accrued payroll tax expense. And so these are amounts withheld from employees' pay that have to be remitted to various government or other agencies or programs like insurance, life insurance, health insurance, dental, etc. Those are balance sheet accounts, and all three of them are liabilities. And then we have direct labor and payroll tax expense accounts, which are income statement accounts. And so in most cases, the accrued wages and salaries account is used only at the end of an accounting period. And so that could be at the end of the month or at the end of the year. And what we're saying is that at that point in time, it may be a week, it may be 2 weeks, it may only be a couple of days. But what we're saying is that at that point in time, we may owe employees salaries for the work that they performed that we haven't paid them for yet. So we must accrue them and debit our expense and credit the liability or accrued wages account in order that we match the expense with the revenue that that effort on their behalf would have generated. And so here we see a few of the business functions in the cycle and the related documents and records. So the payroll and personnel cycle begins with personnel hiring. And at that point in time, we probably have an offer letter to the employee that indicates their start date and their salary or their hourly rate. Then the process continues as the employee works and to the end, whether it's the payroll cycle or at the end of their job, where we end up paying them. And then so we'll talk about some of the accounts and how we test those balances and those transactions from the time an employee is hired until the time we pay them. Personnel records include such data as the date of employment, personnel investigation, rates of pay, authorized deductions, performance evaluations, and termination of employment. The forms are used to authorize payroll deductions, including the number of exemptions for withholding income taxes, and the rate form is used to authorize the rate of pay. So there are multiple forms in the human resources function that we use as a part of our test. Obviously, adequate controls are necessary to prevent misstatements in these activities. And so there are activities like timekeeping and payroll preparation, the payroll journal, the payroll transaction files, our job ticket record, and our time record. So inherent to this timekeeping and payroll preparation, we'll see all of these different types of records emerge, and we, to some extent, may perform a lot of testing or limited testing, but maybe looking at these different types of records. The payroll master file is a computer file used for recording payroll transactions for each employee and maintaining total employee wages paid for the year. Payments may be made by check, but are usually deposited directly into an employee's individual bank account. And so anymore, we don't see a lot of times where companies still issue paper checks. It's generally done through an automatic clearinghouse transfer or an electronic funds transfer, where employees' bank accounts are automatically credited for the net amount of their payroll. The W-2 form is sent to each employee and summarizes the employee's earnings for the calendar year, and this is then used by employees to file their taxes. So a copy of it goes to the employee, and also a record of what's recorded on the W-2 goes to the IRS. The payroll tax returns are forms submitted to local, state, and federal units of the government to show payment of withheld taxes and the employer's tax. So we have a W-2 that goes to the employee, and the employer is required to file some recording of that, and whether it's paper recording or an electronic recording depends on the employer's size and number of employees they have. And then we also have these payroll tax returns. An example of one of those might be a Form 941, which records with the IRS quarterly what was paid to employees and what was withheld and when that was remitted to the government, plus any employer contributions required for that quarter. Internal control for payroll is normally highly structured and well controlled to manage cash dispersed, to minimize employee complaints and dissatisfaction, and to minimize payroll fraud. Test of controls and substantive tests of transactions are the most important means of verifying account balances in the payroll and personnel cycle. These tests are emphasized because of the lack of independent third-party evidence. And so segregation of duties is necessary also in the payroll cycle to prevent overpayments and payments to non-existent employees, or what are sometimes referred to as ghost employees. Only the Human Resources Department should be authorized to add and delete employees from the payroll or change pay rates and deductions. The appropriate documents and records depend on the nature of the payroll system and the policies and procedures in effect at the client. Time records are necessary for hourly employees, but not necessarily for salary employees. Again, this varies from client to client. Access to unsigned payroll checks should be restricted, and in a lot of cases what we see is that these are locked up in a safe, that there are strong controls over unsigned checks. We don't see a lot of those, again, as we said, being used because of the electronic transfer nature of payroll payments made now, but we still see that where employees may be terminated or for whatever reason a hard check is required, they still exist and still should be tightly controlled. Payroll computations should be independently verified, including comparisons of batch totals to summary reports. So there are several controls that are inherent to a payroll system that the auditor should make sure they're aware of before they start testing these controls, so that they understand how are they supposed to work and what are the risks that they are supposed to mitigate. As part of understanding the internal control, the auditor should review the preparation of at least one of each type of payroll tax form that the client files, because it's very important the client file their tax returns on time. What this does is point to this tone at the top that we talked about earlier with respect to ethics, and clients who are routinely and continuously late with this, it would suggest that perhaps compliance with applicable laws and regulations is not important, which could have an impact on our determination regarding the importance of internal controls to them. So when labor is a material part of the inventory valuation, auditors should emphasize testing internal controls over proper classification of payroll transactions. It's essential that there be consistency from period to period with regard to this classification. Significant business risks affecting payroll are unlikely for most companies. However, risks may exist for complex compensation arrangements, including bonus and stock option plans and other deferred compensation arrangements. Inherent risk is typically low for all balance-related audit objectives. Tests of accrued payroll expenses are ordinarily straightforward if internal controls are operating effectively. So if we've reviewed internal controls, we tested the internal controls, and we've concluded that they are designed properly and have been implemented and are operating to achieve the intended results, then we can really reduce the amount of substantive testing we do of accrued payroll expenses, since these become very detailed, time-consuming, labor-intensive tests that really aren't necessary if we conclude internal controls are working as intended. Two major balance-related audit objectives in testing payroll liabilities include: one, that accruals in a trial balance are stated at the correct numbers, and so we're testing there for accuracy. And secondly, that transactions in the payroll and personnel cycle are recorded in the proper time period. So now we talk about this idea of analytical procedures. And as we said with analytical procedures, what we're looking for are relationships between financial and non-financial information to make sure that these relationships make sense. And so here we see that one analytical procedure we might do would be to compare the payroll expense account balances with previous years to determine whether or not they are materially different. And if they are, we need a reasonable explanation from the client. If they aren't, it could suggest the misstatement of payroll expense accounts, which could be due to improper cutoffs. There are multiple reasons why this could happen, but this analytical procedure and this comparison is meant to highlight that, bring it to our attention, and to make sure that that's not the case. We might also compare direct labor as a percentage of sales with previous years. And so there again, that kind of points to we're taking two somewhat dissimilar numbers and looking for trends, and then coming up with or asking for explanations where they may not, where these trends move in one direction or another. And this just continues on with some additional analytical procedures that can be performed with respect to payroll and personnel cycle, and then some possible misstatements if we don't get adequate explanations of the results of these analytical procedures. And again, we're kind of, you can see we're talking about comparing different items on the income statement. And in this case, we're looking at, the first two cases are looking at expenses and sales, or expenses and salaries, to come up with some sort of trend analysis and then looking for explanations. The last one is looking at comparing a liability account, that is accrued payroll, between years. So, and then these are two major balance-related audit objectives that we talked about earlier, that accruals in the trial balance are stated at the correct amount, and that transactions in the payroll and personnel record are recorded in the proper period, testing for cutoff. And here what we do are talking about the different tests, the liability account balances that we would test as a part of our transaction testing. And so we would look for amounts withheld from employees' pay to make sure that those amounts withheld calculate according to the documentation on file for the record. We would look for balances and test the balances in the accrued salaries and wages, accrued commissions, accrued bonuses, accrued payroll sick or other fringe benefit, and accrued payroll taxes, to make sure that they are adequately supported with detailed documentation. And then there are some expense account balances related to this business function that we also test, such as the officer's compensations, commissions, payroll tax expense. The employer has a portion of payroll tax expense that they have to pay for employees, such as FICA. We would test total payroll expense, and we might also test, or would test, contract labor. Then we also look at what are required for presentation and disclosure in the footnotes. And we note that with respect to this business function, the required disclosures are not really extensive. Except to the extent that there are some complex transactions that may require footnote disclosure. And here we look at the various different types of audit tests for the payroll and personnel cycle, and we look at how these tests impact the various accounts that we talked about earlier. And so that concludes the session on payroll and personnel cycle. As you can see, it's not a terribly complex, or not one of the more complex business cycles, and it makes sense if we think about the fact that payroll and personnel have been around forever. And so there are only so many different ways that firms can record time, process time, pay employees. And so it's a well-established process or business function, and so the audit procedures around it is generally well-established. And so I would encourage you again to go back and read Chapter 20 and make sure you're well familiar with all of the concepts in the chapter, and move on to Chapter 21. But please don't let this discussion substitute for a thorough reading of the chapter. And thanks very much for your time.